Welcome to the EntrePastors podcast on YouTube. This is a show that helps pastors think, act, and thrive as prosperous entrepreneurs. Well, hello everyone, and welcome to the EntrePastors podcast on YouTube. My name's John Sanders. I'm one of the co-hosts of the EntrePastors podcast, and so delighted to have you tuning in for the conversation this week. We've got an amazing guest. She is actually the Chief Financial Officer, the CFO, for EntrePastors and the business that Les and I are building together. And her name is Christine Odle. She is an expert when it comes to all things tax-related, accounting-related. She knows her stuff, and she's a big part of the success that we're having at EntrePastors and helping get our business set up correctly. She has spoken into the lives of others in our EntrePastors community to help them get their businesses set up and squared away. And so today's episode is going to be super practical. As we are in tax season at the time of this recording, we're going to talk about some of those things that are not necessarily fun to think about, but if we set them up right, we can have a lot of security around that and just peace of mind knowing that we are doing this in a legitimate, above-board way and that we're not going to get ourselves into a bunch of trouble with the IRS or a bunch of debt that we did not see coming because we were not paying attention to all of our numbers. So Christine is an incredible guest. She's a friend of EntrePastors, and I know you're going to be encouraged with this conversation. So Les, my co-host, is the one that had the interview with Christine. I was not able to be a part of that, but I did listen to it, and it's great stuff. So without any further ado, check out this interview that Les did with our friend and CFO, Christine Odle. Here we go.
Christine Odle, welcome back to the EntrePastor podcast. We don't get to say that very much, Christine, because we haven't had, only maybe one or two people we've had back on the show, but you are a return guest. So welcome back.
Thank you for having me. I'm glad to be here.
And it's no accident that we are talking to you at this time of year, at least when this podcast goes live and is released. So a couple things, just some housekeeping as we get started, and then I want to introduce you to our listeners, and then we'll get rolling. One of the things that folks will notice right away is that my esteemed colleague, John Sanders, is not able to join us today. John is right in the middle of a major, like Snowmageddon, Ice-mageddon in his home of South Dakota. So right now he's snowed in, iced in. As a matter of fact, literally, Christine, as we speak, he is sitting behind the wheel of a snowplow, and he's clearing the ice and snow out of the way for first responders, the ambulances, fire trucks. All those folks keep working. There are still those things that happen. So that's what John is doing right now, and so I wish that he could be in this conversation, but I'm so thankful for him and that he's willing to get up there and serve. And that's not, you're kind of out in that part of the country too, right?
Well, right now I'm in St. George, Utah. And so we did get snow. We got like an inch and the whole world stopped because we don't usually get snow. Colorado, they shut down every exit from our town 2 days ago. Yeah. Blizzard conditions. So if you were going to have a baby, you're going to have it at home with whoever was at home with you because you were not getting out and the wind was way too high for a helicopter.
And that baby might be delivered by somebody like John.
Yeah. Or just whoever's at the house at the time because there was nobody in or out. Yeah.
That's exactly right. I know somebody that was going to be flying into Washington, D.C. Tuesday. And they have canceled that flight already. Things are so jacked up and backed up now because of all that. But we're thankful that we're able to have this conversation today. So thank you very much for being willing to do it. Now, for everybody that may not know, Christine Odle is our CFO of EntrePastors. She's also a personal financial coach for yours truly and for my family. And Christine, you've just been a special blessing to Paige and myself and our family during the time that we've known you. And therefore, I know that this is going to be a valuable conversation for the folks that are listening to us, because many of them, as you know, they are small business owners. Some of them, many of them again, are also in some kind of vocational ministry. So there's a lot that's going on, and even apart from having a business, with some of the deductions that they can take, and they're kind of self-employed, but many of them are W-2 as well, and on the staff of a church. We're not really going to get into that part of it. I'll let them get their own, counsel in that world. But I do want to talk to you about what this time of year means for small business owners, and some things to keep in mind. Some of them as they're setting up their business. When you appeared on our podcast at the last time you were with us, you talked about that some. But would you just kind of talk about, people get anxious this time of year for various reasons. Many of them are not necessary if they've prepared well. So would you just kind of talk us through over what needs to happen in the last these last few weeks as we lead up to tax season, or tax day? Actually, we're in the middle of tax season. So what are some things that they can do to just pay attention to maybe take away some of that stress? And then we'll talk about how they can prepare themselves throughout the year, so that next time around, when we come to this time of year, it is stress-free, and they can just, it's much, much easier for them.
Sure. Well, most of us know that for a personal tax return, it's due April 15th. Very few of us remember that business tax returns are due March 15th. So if you're an S Corp or a partnership 1065 return, both of those are due March 15th. And so if you're not ready today, if you have not given all of your information to your tax accountant for your business by, actually, I always say February 15th, then just tell your tax accountant to extend your taxes. That will take all the stress off and make you feel really footloose and fancy free. Let's extend, because there's no taxes due on an S Corp or a partnership return. There's no money due on March 15th, but you either have to extend by March 15th or you have to file by March 15th. And so most CPAs I work with, they want the business side and the personal side together, because that's where tax strategies come into play, is where do we really want to deduct X, Y, Z, right? And so if you have both sets of information together for the CPA, then the CPA can look at which return a deduction should go on. Now that's can take you completely into the weeds, and I don't want to do that. I just want to say, if you are right here today where this recording is being done, or whenever it goes live, is that if I don't have all of my information for my business to my tax accountant by February 15th, February 28th at the latest, then we're just going to extend, and that takes a lot of pressure off. Now, if you think you're going to owe taxes, you need to pay whatever you think you owe by April 15th, but you don't necessarily have to file by April 15th. And so if you're going to extend your business taxes, you might also want to extend your personal taxes, just to give yourself a little bit of a cushion. But if you think you owe, go ahead and pay what you think you owe.
And when you say owe, you're referring to personal taxes.
Right. Businesses don't owe tax unless you're a C corporation. And a C corporation is almost never used anymore because the S Corp takes care of it all. But a C corporation gets taxed. And I don't even know how to advise you on that, because I've never dealt with a C corporation myself. Mm-hmm. Businesses I've worked with.
You know what, Christine, while I'm thinking about it before I forget, you do go into the differences of these categories. We could talk a little bit about it today in a general way, but you do go into great detail in your book, which we have, and it's really our playbook in many ways that we, there you go. If you're watching this on our video, you just saw, hold it up again. You didn't give it enough time. There it is. So Rocking Your Business Finances by Christine Odle, O-D-L-E. And where are the places that they can get a copy of that, Christine, if they want this?
Sorry about that. You can get it Barnes & Noble, Amazon.com. You can get it on my website, christineodle.com. just any bookstore, I actually recommend that you go into a bookstore and ask for it. That's usually kind of gets you in the bookstore, but that also gives you around other business books as well. Mine's great, but there's tons out there. But Amazon.com is the easiest. Look up by my name, not by the name of the book. Comes up after.
To me, one of the most helpful things about that book is the examples that you give in there. So in that book, you give actual business examples of what it looks like for an S corp, or what it looks like for partnership, and how that's broken down. I still go back to it because I need brushing up. It's not, I don't have a working knowledge of all of that. And so it's helpful to still go back and see the differences, the advantages and disadvantages of each of those. And something else that was information to me, Christine, is how there is a legal description of how your business is classified, and then there are the tax implications of that. So since other people are probably the same way that we were when we first started out, would you go into those differences a bit, because that's really helpful?
Yeah, that's actually the biggest thing I get when I talk to a business owner for the first time. Say, how is your business structured? Well, I'm an LLC. Like, okay, great. You are a legal limited liability company. Great. You've given yourself some protection. That's the legal side. Now, how do you file your taxes? And then I get the
They go,
yeah. What do you mean? It's an LLC. Well, yes, legally you're limiting your liability. Right. You're putting a layer of protection between yourself and whatever you sell. But when we file taxes, there's 4 different ways to file the taxes, and we briefly touched on that. The C corp, which like I said, I've never used it. I don't know anybody who does in a small business environment. But the step up from that is an S corp, and that's a different tax return, so 1120 tax return, and it separates you completely from your finances, from your personal and your business. And an S corp, I call it the mighty S corp because there's so many things you can do in the mighty S corp that you can't do anywhere else. A single person business, single member LLC can file as an S corp, but not as a partnership, because you can't be a partner with yourself. And the IRS does not want you to be a partner with your spouse either, because that's still kind of yourself. Right. And so partnerships are kind of, throw them out there. If you have to be in a partnership, then you would have a partnership return. And then the biggest step down is what we call the Schedule C, the self-employment. And that's, you don't do a separate tax return. That's not the March 15th deadline. That's just the April 15th deadline. But the thing with the Schedule C that I really, really don't like is 100% of your profits are taxed Social Security and Medicare ×2. So that's the self-employment tax. That's 15.3% of whatever your profit is before you talk about state or federal income tax. Straight right off the bat, 15.3%. If you're in the mighty S corp, it's not the case. There's lots of rules in the mighty S corp that really help you not to pay as much of that 15.3%. So that's the breakdown of it. So LLC can be any of those things, or a corporation. So you can be Les Hughes Inc. And then as Les Hughes Inc., you could be an S corp or a C corp.
Gotcha. All right. So when you're setting all that up, why is it that sometimes when you're talking about people that are in the business of helping small businesses get started, why is it that so many of them warn people about setting aside money for taxes? What is it really getting at? Where do businesses come into trouble? Because you made that statement, well, businesses that S corp really doesn't pay taxes. Then what gets people into trouble when they haven't prepared?
What gets you in trouble is all this money comes into your business and you take a bunch home and you don't take aside money specifically for tax. Because once you bring it home, depending on how you've structured your business, it could be taxed. So there's 2 different financial statements you really have to look at. There's really 3, but the 2 main ones is your balance sheet. That's all your stuff, all of the money you have in your company, any assets you have in your company, any liabilities you have in your company. And if you, let's just, for example, let's just say you took $25,000 to start your company and you took that out of your personal savings and you put it in your company. Well, that's not income, that's equity, right? So your company technically owes you $25,000, or that's the value of your company starting out. So you have $25,000 that you put into your company. If you start out in a year and you make a profit of $10,000 and you take $10,000 out, some people say, well, I put 25,000 in, so that's not taxed. That's not necessarily true, because the income is a different financial statement. So a $10,000 profit, you're going to be taxed on that profit. You can take 25,000 out anytime you want, but you're still going to get taxed on that $10,000 profit. So a $10,000 profit, if you're a Schedule C, multiply by 15.3%, because that's your self-employment tax immediately. And so if you're going to bring 10,000 home, you need to put $1,530 in a savings account just for self-employment tax. And that's not federal or state tax. When you're talking about business, a lot of times they'll say, well, have a savings account for business taxes. Then it's a little bit of a misnomer, because it's really personal taxes, unless you do payroll. If you do payroll, then you do have payroll taxes or sales tax, stuff like that. But a lot of people, when they're just operating on a one bank account, it's like, oh, it's all my money. And so you take it out, and then all of a sudden you have to pay payroll tax, or you have to pay sales tax, and there's no money there for that because you took all the money home. That's where that idea is. So if you think you're going to owe tax in some level with business, you've got sales tax, payroll tax, or income tax, then you better stick some money aside in a savings account and be ready for whatever tax is going to be due.
Gotcha. All right. So one of the advantages of working with you is that you also have resources. You got people in your network who are very good at the bookkeeping side of what we're talking about. These aren't CPAs. They aren't financial advisors. These are people who are going to see the data and enter the data, and then give you that balance sheet and also give you the profit loss statement. Notice I didn't say profit and loss statement. You've taught me that there's no such thing as a P&L. So we can talk about that.
Profit or loss. I just put profit statement because I like my people to have a profit.
That's right. So there are some major advantages of having somebody else that's actually doing that task. So because now that we got some people that are trying to, maybe they think they're saving a little bit of money and making those entries and doing all that themselves, but it's really not their strength, really not very good at it. So would you just talk about the wisdom or the advantage of having somebody on your team or somebody in your world that does that part of it, and how much time that can save this time of year?
Yeah, if you are not a numbers person, don't torture yourself and terrorize yourself, because by doing your own numbers takes you away from what you do best. That's, I think, the most important. Like, I was talking to a lady last night, went to an art class, and I was talking to her, and she's like, I hate the numbers of my business. And I'm like, okay, but if you don't know what the numbers of your business are doing, how do you know how much to charge for what you're doing? And how do you know how many times you need to do a class every, a class a week, a class a month? Is this a hobby? What is this? And she's like, I just don't know. And I'm like, my comment to her is, nobody cares more about your money than you do. The IRS will take whatever it thinks, when you fill out the form, the IRS will take its share when you fill out that form. But if you have no idea what to fill out the form with, and you don't fill out the form, and they come back and say, well, you had a business and you didn't fill out the form right, and so now we're going to penalize you for not doing that. It's a mess. And so just to have a bookkeeper, you can get a bookkeeper for $25 an hour or $200 a month or $500 a month. I prefer to get a bookkeeper that's a flat fee rather than an hourly rate, because I don't want to try and figure out if there were actually that many hours on my project. I just want to know how much to do this.
Yeah.
And so I want to know how much to give me financial statement every month to make sure my accounts are reconciled, to make sure that all the data is in there, and to be looking for stuff that I might have missed. A really good bookkeeper is going to look for stuff that you might have missed. An example of that is one of my clients used to run her cell phone through her business, and then all of a sudden it wasn't being run through the business. And so a bookkeeper mind, I'm like, where'd the cell phone bill go? Oh, I added my husband. Great. let's subtract his phone out and put the rest of it back on the business because you use it for your business. And so a good bookkeeper is going to look for those kind of little flags, like there's no telephone, there's no internet. Somebody might say, well, the whole house uses the internet. Okay, fine, but you are using either a portion of it or you have a higher speed internet for your business if you're doing podcasts than the household might need. And so the business can start deducting that. So a really good bookkeeper is going to go looking for that stuff, and might not be hitting your business bank account, might be hitting your personal bank account. So we're looking for that stuff. But a bookkeeper is also a historian. They're not living in the month of whatever. I'm going to say this is February. They're not living in February. Your bookkeeper lives in January. They're looking back at what you did, and then they're trying to reconcile January out. Okay. And so a really good bookkeeper is going to look at every single month and keep you up to date, because by this time of the year, if you say to me, you haven't even reconciled January of 2022, then I know you need a bookkeeper.
Yeah.
Because you really hate doing it, but you have no idea what your business did month to month to month throughout the year. Mm-hmm. No idea if you can take money out of the company or not without train wrecking the company. You don't really know how much you spent on things. You might have some vague idea in your brain, like maybe I spent $500 on a Facebook ad, but I didn't remember that I did that every single month. And so now that 500 is $5,000. Oops, I forgot to turn it off. But the bookkeeper is going to catch that on time.
Yeah.
So a really good bookkeeper, in my opinion, is a fail-safe on just about every level.
No doubt. It sure has made our world easier. And here's something else that was news to me. I suppose I'll put it that way. But when we started down this journey, you helped me also understand what that CPA or let's say the tax preparer, in our case, it was a CPA, still is, what that role is and what it is not. So I just sort of, I trust those professionals in some ways to go beyond what their task really is. So for the most part, unless you give permission to a CPA, that CPA is not your tax coach necessarily. They're gonna do what you tell them to do within the legal parameters, of course, but if you can't depend upon them to find money for you and find stuff for you. I mean, unless they're good at that and you give them permission to do that. So what it has helped us though, to have, in our case, it's you, to be that more of a coach for us, that you understand that world, but we have somebody that does the tax preparation itself, that understand in our state, because you're in a different state. So so they do state and federal. They understand that whole world. But what they don't do is say, I noticed here in this line item, this category, you could actually save some money by putting that over there. They don't do that because that's not that person's role, correct?
Correct. I mean, have you ever read the tax code? I read one section of it yesterday and it was 400 pages long.
Yeah.
One section to fill out one document that was 5 pages long. The tax code for that document was 400 pages. My eyes went googly, and I do this for a living. I was completely googly-eyed by the end of the day. I was like, what have I just done? and I'm still not confident I got it right. Mm-hmm. And I do business. I've written a book. I know business. I know tax. But this part of the code was so convoluted. And so the CPA's job is to know the tax code. And so the tax code isn't just the tax code for Les, or the tax code for John, or the tax code for me. It's the tax code for everybody. And so there's hundreds of thousands of tax code pages that a CPA needs to know. So that's their job, is this is the code, and this is the form I'm going to fill out for you. And I don't know if you've looked lately, but even an S-Corp tax return is usually around 28 to 30 pages. Yeah. So there's a lot of knowledge in the head of a CPA, but that knowledge is not necessarily going to come out unless you ask questions. And who knows what's the right question to ask anyway? Nobody knows what the right question to ask is until we get there. And so what I do is help your CPA a little bit. Go look at your tax return. Page 1 will tell you some pretty simple categories that you should be using. Rent is one of the ones that's overlooked the most. So several years ago, and I'm going to go back to when I started my company in 1997, the home office deduction. I don't know if you remember that, but you have to take a measuring tape and measure the square footage of your room, and then you measure the square footage of your house, and then you divide the square footage of your room by the square footage of your house, and that's how much of your business can deduct of all the expenses. And that's craziness. And for years and years and years, that was a red flag audit for the IRS.
There are still some people, Christine, that believe that that's the way it is right now. There are still some people that believe that.
Oh yeah, it's still, you can believe that. But 3 years ago, the US government sent millions of people home to work. And so now to actually audit anybody on a home office deduction, I don't think they have the manpower for that, even with Biden's new 80,000 new people or something. Sorry, try not to get political here. So based on that, there's a line item on the very first page of your tax return that says rent. And so I always like to tell you this little story, is I want you to take your human body out of your office space in your house, walk down the hall, and imagine Christine Odle and Rock and Baby Enterprises, that's my company. We are going to move into that space, and I'm going to move in with my company, and I'm going to use your bathroom, your kitchen, your microwave. I'm going to want some heat in my space. I'm going to use your internet. I'm going to speak to your children and possibly pet your dog, most likely pet your dog, maybe not talk to the children. Just kidding. But I'm going to be in your life, and there's a fee, that there's a value to that. So if I'm going to move my entirety into your little space, whatever that space is, it's probably a guest bedroom. But if I'm going to be that much in your space, there's a value to that. And so you have to ask yourself, how much would I charge Christine to rent that space for me to be in my space? Whether she's there 1 day a month or 30 days in a month, doesn't matter, because she has the access to that space. And so depending on the house that you live in, that space could be worth $300 a month. It could be worth $900 a month. It could be worth $1,500 a month, just kind of depending on the space. But you have to think in your mind, what is that really worth? Then there's that line item right there on your tax return. You don't have to actually write a check out of your business to take the value of that space. It's handy if you have a mortgage to write a check from the business straight to the mortgage company as an extra principal reduction, whatever you want to do it. I wouldn't write a check from the business to you personally, because then you have to 1099 yourself. But you can pay rent out of your company, or you can do what we call a non-cash transaction that claims the rent. And I'll just use an easy number, $500 a month, $6,000 a year. You can just write $6,000 right on that line. Tell your CPA, I'm going to take $6,000 a year in rent. Pretty simple. There's no more measuring and dividing and multiplying and adding and all of that. It's pretty simple. How much does it cost? What is the value of that business being in my space? Now take Christine out of that and take your company and put it in that spot.
I'm glad you said that, because you really don't have to have the money in your business bank account to pay you rent to make that transaction. That's something separate. So, I used to think that it's like, I'd love to pay myself rent, but the cash flow is just not there this month. So, but you can make that on the books. You can still make that transaction, and a good bookkeeper to know how to do that, to know what we're talking about, to where it doesn't have to exchange hands in order to do what you're referring to.
Well, and here's kind of another cool part. I always use the term legal legitimate business expense. LLBE, legal legitimate business expense. And I learned that a long time ago. Actually read a book by Larry Burkett called Business by the Book. And that's doing your business biblically, honestly, with integrity and all of that, because I don't want to defraud the government, but I don't want to give them any more money than is their fair share. Mm-hmm. So when you do legal legitimate business expenses, it might actually throw your profit statement into a loss statement. But if you're still a W-2 employee, that's good news, because it doesn't mean that you spent all the money, but it does mean you're taking every legal and legitimate business expense. And if you have a negative on your business and you made a income off of the W-2, then this offsets that income, which lowers your tax liability.
Yeah.
Now I'm all excited. I like to lower the tax liability.
Yeah. Absolutely. Well, we're at the time of year now, as we've said, that it's a little late to be finding someone now, but let's just fast forward a little bit. We get past this time of year or whenever it is that we actually file, and say somebody is getting ready to set up their business, they're getting all their ducks in a row, and then, or they're, for whatever reason, maybe they're needing to change their tax preparer. For whatever reason, they aren't satisfied, or they moved and they want to start over or something. And they sit down to have that conversation, or they're interviewing, they're asking people that they respect in the world, hey, I'm looking for somebody new to handle all my personal and my business stuff. So we're going to sit down and have that conversation. So as a business owner, here's the thing that I'm going to share with the folks that are listening. Ask the questions. I'm getting ready to ask you, Christine, what kinds of questions are good questions to ask that potential tax preparer? Because what happens is we get a referral from somebody else. Well, if they're good enough for them, they're good enough for us. And then we give them all of our stuff. And then we get this tax bill or tax preparation bill. And it's this much for personal. It's this much for filing for the business. And oh, by the way, we were bringing on somebody new, and so they are an hourly employee, and we put that on there. And pretty soon you're stroking a check for thousands of dollars for several and if you have other businesses, other LLCs or whatever, or you're filing for, we even changed from one category to another, to make ours an S corp. Well, guess what? There was a cost for doing that. So what needs to happen as a business owner is you need to be finding out early on a real, I was going to say approximately, but as specific as you can find out what it's going to cost to have those taxes prepared, and then set money aside each money of the year throughout the year. So you'll have that. Otherwise, you've got all this, you got money coming out, you got money coming in, money going out, but you're not going to have enough to pay for the preparation of those taxes. Or if you do get any personal refund, it's all going to go to the tax preparer for having done them. So what kinds of questions, Christine, should we ask a potential person that we're interviewing? They work for us, by the way, right? We don't work for them. So what kinds of questions should we, and then we're going to wrap up our time together.
A CPA is like choosing a personal doctor. It's important that you know you're on the same page. And just kind of some story, like one story, I had a CPA years and years and years ago that was my mother-in-law's, and they were good friends for a long time. And we weren't an S corp. We were doing a partnership return, which was craziness with the amount of income we were making. And I finally went to the CPA and I said, why am I paying so much money in tax? And my CPA said, well, you have to pay your fair share. And I'm like, yes, my fair share, but not the world's fair share. It was an extensive tax bill. And so what I found out was she was really in favor of small business owners paying more money in tax. She was not working for me. She was working for the government. And close personal friend of the family. And so we kind of had to step back and say, this is not going to work for us, because it was so much of our profit was going to pay tax. And so I asked her about the Mighty S Corp, and she's like, oh, I don't believe in that. That lets you pay less taxes. I'm like, okay, we are not on the same page. Wow. We are not on the same page. So what I did at that point is I actually started interviewing, and I interviewed over 50 different CPAs to find somebody who had a heart of a teacher, because I do want to be able to go to them and ask questions on a regular basis. Had reasonable fees. So you always want to ask, how do you bill? What is your fee structure? If they are an hourly rate fee structure, I have no interest in them, because a really good CPA will know approximately how long it takes to build up a tax return. And they should be able to quote you a flat fee for that. I want to know how many times I can talk to them throughout the year. So my personal CPA that I have now, that actually came from that interviewing process, I can call him anytime I want. I can text him anytime I want. I can take him and his wife out to dinner anytime I want, because we become friends too. But I know that I have a really good, safe place to go ask good questions, and it's not going to cost me $200 an hour every time I have questions. It's just all included in the tax preparing fee. And he does expect me to call him at least 3 times a year. So I call him before the end of the year. So usually November or December, we have a pre-year end conversation. We have a conversation before I send him all of my tax documents. And then we do a complete review of the tax returns after he's done filling them out. So that's extensive what I expect from my CPA. And then I also, because we have a good relationship, I also can go to him with other questions for other clients, which is great. And he never charges me extra. So, I just always want to know exactly how much I'm paying, what it's going to cost. I want to know if he's available to give me advice or if he's just there to fill out a tax return. Then when you're just starting out and you just have, maybe $10,000 a year in sales or less, or, you don't have extensive stuff, you probably don't need a fancy CPA. You might, I don't recommend H&R Block, but you might not need the high dollar CPA firm in downtown Alabama, wherever you are, right? So you might want somebody who just does more of a sliding scale, whatever. But I do recommend interviewing because some CPAs are all about Charlie Brown's teacher, and you can't understand what they're saying. They're so into the technical aspects of tax. I want somebody who can actually talk to me and speak my language and the lingo. And I have a kind of an advanced financial lingo, but I still want them to come back to layman terms so I can really understand what's going on.
Sure.
But fees is important. How I'm going to be billed is important. Building that relationship. And then finding out where they are, like ask them what kind of books they read. Have they read this? I actually have a couple of CPAs that recommend my book.
Yeah.
And so that I know that they're thinking on the same wavelength as well.
Right. That's good. Good counsel.
That's how I do it.
Well, Christine, anything else that you could, something I did not ask and you're thinking, I wish you did really ask me this because it would have been helpful. Anything like that you can think of before we go?
There's like, I could go on and on and on and on. Mostly when you're thinking about taxes, it's not too late. Today is a great day to start. So if you really haven't done January 2022, it's a great time to go. I need to find a bookkeeper that has a little time right now that can help me get caught up. Extend your taxes. Do that right off the bat. New dates, if you extend, business returns are September 15th, personal or October 15th. Great time to file. Actually, the best time to file is May or June, because May, your CPA kind of takes a little bit of a break and kind of regroups, but they want to get taxes done before the September, October deadlines. They want to get them done, but they're not as hurried, they're not as rushed. So if you want to spend in February, in March and April, then you want to have a goal of May and June for filing.
Okay.
But don't put it off any longer. I guess that would be my big cues.
Good.
Even if it's just the old-fashioned check registers, you're filling it out and you're reconciling, fine. Excel spreadsheet, fill it out, printing off I always say print off your bank statements. Don't just leave them online, because just about the time you really need them, you can't get onto them. So
Right.
go and get onto your bank and print them off, or at least save the PDF of your bank statement. And then you actually have the hands-on for it.
Yeah, because most of them roll off after a certain number of months and you can't access them anymore. That's good counsel.
Right.
Good. Well, Christine, I always learn something in these conversations. Thank you for being available. Thank you for being part of EntrePastors and coaching us well and advising us well. So, sorry, you don't give advice, do you? I forgot about that. You don't give advice.
I just give opinions.
We appreciate the coaching and the opinions, and thank you so much for coming on here today. If somebody wants to reach out and they want to look at your website, or we've given them the way to get the book, how can they do that and see what kind of content you have out there? And by the way, everybody, Christine is also an author of children's books. So that'd be a good way for us to kind of sign off and for you to share that as well. So why don't you tell people the title if they're listening to the podcast and can't see it?
It's The Adventures of Black Goat and Yellow Dog, true story based on a couple characters on my street. And their first adventure is they're going to meet a bear. It's a great story about facing fears, understanding fears, and learning about friendship. So I love the story. It's a lot of fun to read. It's great read out loud to your youngsters, or if you've got kids that are just about to get into chapter books, it's great for that too, because there's chapters. But you can find me, ChristineOdle.com is the easiest probably. But older website, rockandbb.com, ROCKINBB.com. My phone number should be on the front page of all of my websites, but it should be on there. If you call me, I'll answer. If I'm on a podcast, I won't answer, but I'll answer later. So just make sure you leave a message if you call me. So.
Well, and I've read the book as well, and it's all the things that Christine has said, and your kids will love it. So get a copy of it and read it to them. Christine, thank you for joining us today.
Thanks for having me. Appreciate it.
Well, hey, thanks for watching this episode of the EntrePastors podcast. Make sure you hit that subscribe button so you can be notified every time we release a new episode. If you'd like to get connected to other pastors who are learning to think, act, and thrive as prosperous entrepreneurs, then we invite you to check us out on Facebook. Just search for the EntrePastors Connect group, answer a few of our simple questions there, and we'd love to include you in the conversations. And if you're really ready to go to the next level, then we invite you to join our EntrePastors membership community. When you become a monthly subscriber, you will receive access to courses, exclusive community, and coaching that will help you along in your own EntrePastors journey. If there's anything else we can do to serve you, please visit us at EntrePastors.com, and we will do our best to serve you there. God bless everybody. See you soon.